CA Raj has been appointed as an auditor of Marco Private Limited, a private real estate company. During the audit, he requested the information from the management to review the outcome of the accounting estimate, such as the estimated cost considered for the percentage of completion used in the prior period financial statement. His objective was to assess their subsequent re-estimation for the current period. However, the management refused to obtain the requested information, arguing that the auditor should not review the prior period estimate. Please advise how should Raj deal with the situation. So they has made a prior period estimate, and the management says that don't review the prior period estimate, accounting estimate. Say accounting estimate is an approximation made by management due to lack of precise means of measurement. There's a lack of precise means of measurement, and these estimates are done by the management. Accounting estimates means it's provision, contingent liability. That is what we understand by the accounting estimate. And life is made of two things. One is estimate, one is accurate. Okay, accurate being sales, purchase, they'll be accurate. Provisions, contingent liability will be estimate. So management is saying that whatever accounting estimates which are made in the prior period, that there's no need to review. That's the thing here. So, but the auditors highlights that that there has to be a re-estimation to be done in the current period. So how do you deal? How as an auditor you will deal with this requirement here? Whenever we talk about accounting estimates, it is governed by SA 540 auditing accounting estimates, including the fair value accounting estimates and the related disclosure. The auditor shall review the outcome of the accounting estimates included in the prior period financial statement or where applicable, their subsequent re-estimation for the purpose of the current period. So whatever prior period financial statements are there, he can review the outcome of the accounting estimates which are there in the PPFS and the subsequent re-estimation for the purpose of the current period. The nature and the extent of the auditor's review takes into account the nature of accounting estimate, what is the nature of accounting estimate, and whether the information obtained from the review would be relevant to identify and assess the risk of material misstatement of accounting estimate made in the current period financial statement. So what is the nature of accounting estimate? And auditor will review the nature of accounting and what is the information obtained from the review. The outcome of the accounting estimate will often differ from the accounting estimate recognized in the prior period financial statement. By performing the risk assessment procedure to identify and understand the reasons for such differences, the auditor may obtain information regarding the effectiveness of the management prior period estimation process, from which the auditor can judge the likely effectiveness of the management's current process. Audit evidence that is pertinent to re-estimation in the current period of the prior period accounting estimates. Audit evidence of the matters such as estimation uncertainty that may be required to be disclosed in the financial statement. That's the thing here. The review of the prior period accounting estimates may also assist the auditor in the current period in identifying the circumstances or conditions that increase the susceptibility of accounting estimates to or indicate the presence of any management bias. That is a possibility that the accounting estimates may have a management bias. See, take example. Management makes a provision on taxation, say 10 lakhs, and subsequently they make a payment of 17 lakhs. Obviously, you will get a doubt that is there a management bias? Why the estimate was not done in a proper manner? Obviously, that doubt will come to you. Actually, obviously, that doubt will stand out. Okay, so then you will definitely start doubting the management procedures in identifying the estimates and why there is an increase in the estimates. That's the thing here. Okay, the auditor's professional skepticism assists in identifying such circumstances or condition in determining the nature, extent, timing of the further audit procedures. And the review here, what happens, my dear soldiers, is that so we are highlighting the review is not intended to call into question the judgment made in the prior period that were based on the information available at that time. So here what happens here, the management is totally incorrect. They have to provide the information to the auditor. Auditor can check that, okay, what is the process of doing a estimation and is there any issue highlight that has to be highlighted here. I'll see you in the next video.